If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Welcome back everyone. It's an important update today because last night we had some crazy news about XRP and we had a pump and dump. So this news was of course false. It made everyone of course FOMO into XRP. We got up to our resistance as we failed to see a body candle closing above this point. This is why we've eventually rejected. Also the fact that it was fake news. So when the news came out, everyone's like, oh, super duper bullish, onto $1.50 now. And then very soon after we saw the dump, it happened very fast. You can see if we go to a 1 hour candle, it was 1 hour of up. And then the direct next hour, we came back down. Can you see with the green pump, it did not close above that highest wick. Even on the red candle, we were above it at some point on the 1 hour. But before that close, it was back underneath. So it continues within our range that I left you guys off with at the end of last week. So as we can see over here, last week we set out some key levels for you guys to follow along with. I think we were on the way down. And essentially I said that we need to hold this wick in order to stop a correction. And in order to continue with our uptrend, we need to break this with daily candle closes on either side. And we've had multiple days in a row failing to break this lower end of support. So that's what's given us the opportunity to break to the upside. What's essentially accelerated the movement up was the fake news. And of course, as it was fake, we just returned to where we came from. And as that's a harsh wick rejection, this is not good news that it was fake. Then of course, it's now attempting to break the lower end. And so in today's update, I'm going to show you those exact levels that we must hold in order to keep a potential breakout above this point, to retrace back to our 95-cent high, and then to finally hit those targets that you're seeing in the thumbnails, beginning with 115, 130, and 150. Those other levels that are in the thumbnails come at much later dates, okay, everyone? So we need to, of course, validate that in the first place. Technically it's not valid, so that's why I'll need to show you the levels that we must hold. Please don't forget to like, subscribe, comment and share if you haven't already. We're so very close to 7k followers. I know that we can hit that in the last 2 weeks of this month, and I've also got discounts at the moment on my ebook, course and mentorship. You just need to private message me on Twitter, links in the description below for the discount code. So what we now need to see, if we do actually lose this wick support, what's quite annoying when you see these, so we set a support, we mark out the wick, we know that bodies need to close below that wick, but we've had multiple breaks of that wick. However, we just couldn't close below it, but with that you're creating new lows. So in fact, guys, you have to then mark out this new lowest wick over here. So it becomes an area. I'm now going to get rid of this very quickly. You can see that we're trapped between these two as support. This area of support, these two are support, and this is currently resistance. As we were above it, this whole area is support, then we now have bodies closing above this point, but below this, so we're trapped in this tight range between 65 and 66.7 cents. So very quickly a move is going to be forced over these next days. Could happen today. Whether we break below this, remember over the weekend we were saying we must close below this for a correction. Well, now we've set a new wick. Closing below this is going to give us a high chance of a correction, but while we are above this, as the 20 moving average on the daily time frame is also that, it would suggest that dumping to this is bullish. I know that sounds weird, but it's just a short-term dip into a key level of support to continue higher. We actually haven't touched it yet, although we have got close to it. Now that this is in line, we know that the lowest support is in line with the 20. So if we come down and kiss that and we see bodies closing above this point, then it's showing that this has been held as support, and then we're looking for breaks higher. If this is eventually lost, so of course we can hold it as support, but if we're failing to break these resistances to get up to there, then it could be that we're reversing and eventually losing it, where we'll come down to the 55 next. As you can see, the 200 EMA sitting on all of this previous resistance of an inverse head and shoulder, or a double bottom over here, whatever you want to call it, shoulder, head, shoulder, or double bottom. The neckline is the same, the target would be the same. And all I was showing you in this area is that the 200 EMA is there. So where we saw this bullish pattern breaking out, is now considered the lowest support that we must hold. So a correction down to there would still be fine as long as we hold support and then reclaim the 55 and the 20 moving average to eventually break our 73-cent high and then continue back up to 95 cent. We're hoping that we do continue to those targets that you see in the thumbnail between $115 and $150. Don't you worry guys, I'll be here along the way if anything does change, but in today's update I've shown you the levels that we must hold, which is this previous neckline over here. You don't necessarily need to come down to there, but that's the lowest support we want to see in order to eventually break out bullish. If we go ahead and lose this neckline, we're invalidating this bullish pattern. We're looking for continuation lower. That would make sense, as that's what the golden pocket is a suggestion of. You're having this big impulse down, we're correcting and retracing up to the retracement levels before our continuation with our original trend, which was down. The only way you go in and invalidate this is by seeing this as a push, this as a retracement / exhaustion, and then continuation higher. That is the only way we go ahead and invalidate it. You don't have to come all the way down to there, although when we're talking about fibs, technically it should go down there. But if this is a super strong wave with a lot of momentum, as we are seeing, you can just afford to come down either to the 20 or even the 55 and then for continuation higher. You don't necessarily need to come down here to the golden pocket. That's it from me today. Don't forget to like, subscribe, comment and share. We're on the road to 7K, and if you want a discount on my course, ebook or one-to-one mentorship plan, guys, understand that with the course and the mentorship you get 3 months free in my Discord community, where on Tuesdays and Thursdays we do group live mentorship calls. So if you're a person that wants to do the mentorship one-to-one, not only are you going to get 5 to 10 hours of my personal help, you're also going to be part of the group chat for 3 months, where you'll get 2 group live calls a week. So on top of your 5 to 10 hours of personal help, you're going to get multiple hours, 2 hours a week for 3 months in the group live mentorship calls. If you want a discount on my offers, message me with the links in the description down below on Twitter. Otherwise, head straight to the website. The discounts aren't applied there, but you can find out more information over there. Cheers, everyone. If any of you are interested in learning how to trade just like me, there's multiple options. Click this ebook. It covers all the strategies that I use in these YouTube updates, so you will have all the same skills. Covers the Japanese candlestick, chart patterns, support and resistance, why I use EMAs over trend lines, Fibonacci's, divergences, and again, using these all together to profit using them. I've also got a discount on my course at the moment, which ends at the end of this month. So that's down to £100. You also gain free access to my Discord community for the next 3 months, where you can expect to be a part of 12 to 24 group mentorship calls. If you want something that's a bit more personalized to your needs, then join my one-to-one mentorship plan. You can choose 5 or 10 hours of my one-to-one help, and included will be the 3 months free in the community, as well as my 6-hour long video course.